Good morning, it's Harvey Jackson. Just going to get through some of the news that hit yesterday. The first one is Trump says the G7 summit. He was there in Calgary or Kananaskis, and he left a bit early. He's saying it's not related to the Iran-Israel ceasefire, but puts everything else that's being tabled at that meeting in question. He questioned the former Prime Minister of Canada and the exclusion of Russia being part of what was before the G7, the G8. So here you got the Senate bill will shrink the tax credit, and that's what I put as the title. But both the House that did the tax bill and then the recommendations for the EPA, both of them are saying to exclude the foreign feedstocks, which just means any foreign oils and fats and used cooking oil would have a lower RIN requirement. Now, it's still thought that the canola would still be part of that as long as it's part of the USMCA. So here's your canola or your soybean oil, and you can see this channel going upwards. It's right at the very top. That gap there, of course, that's probably going to have to get filled at some point in time too. So a little bit of a pullback that we have here. And just looking at where it is in relation to when there was a lot more talk about the whole green energy using canola and soybeans for producing renewable and biodiesel. So here, this is just an article, and it's just the basically abstract of the article. I can dig if somebody asks, but all it's talking about is what other countries are going to have to do to position themselves around what they think will be policy going forward with the U.S. on the feedstocks. Shares slide in Europe as the conflict kind of gets maybe even more entrenched. Fuel is actually getting pushed pretty hard as well, even though it's pulled back a fair bit off of its highs. Crop conditions came out yesterday, and basically everything looks like it's improving. Corn good to excellent, improving. Soybeans improving. Cotton, spring wheat is probably the one I want to. It's at 57% good to excellent. Trade was thinking it was 54, so it's even better than expected. And those rains that hit are probably at the right time. And again, when you look at winter wheat, it's decreasing, but when you've got heading versus green mass leaves, it always looks different as well. Here's the NOPA crush numbers that Karen Braun put out. You can see that the crush numbers are quite a bit higher than the past years, and that's expected. But the stocks are decreasing as well from where they were in the past years as well. So all expected, but it should still support the veg oil complex. Policymakers for the Fed exchanges are meeting, but there's a lot of geopolitical risk and unclear tariff impact. None of that can be figured out because the market has not figured it out, that's for sure. So this is just from the Nutrient website or the Ag X website, and just talking about the where the ridge riders are, and you can see that this is adding in moisture, and hopefully it can hit some of these X's up here, but I'll show you that it's making some holes in the market or in the forecast, right? So it's not just a blanket of snow, but it does look like moisture, but there's a fair bit of moisture going to be hitting west of Calgary there too, if this actually comes. You can see that there's a big build of moisture now. Still has to happen. I just showed you two different models. Here's the active weather across the U.S. And canola is slightly down. European rapeseed is slightly up. Soybean oil is down as well. And the wheat is on both sides of being mixed here. So here's your July canola futures, soon to probably have less and less volume and less importance. That spread has been narrowed down to just a few bucks here now. So here's your canola for your November contract. We're trading at 736, still trying to make some new highs there, but little up and down there. But so this one is actually just the U.S. dollar, and if you looked at the previous chart, these were the same highs, but the Canadian dollar has been on its rise, and usually it actually impacts how the canola is traded. So definitely have some strength even with the rising Canadian dollar and the rising futures. And here's January futures. We're talking about doing some trades on that one. Soybean oil, like I had pointed out earlier, it's gapped higher and still looking like well support there. Soybeans hasn't even got to previous highs that were made in May or even first part of June. Crude oil, the conflict has made this market go up, but it's pulled off some of its highs here. Canadian dollar, like I was mentioning, it just keeps on going up here, which is maybe time to reposition the U.S. dollars at some point here. Your July futures of wheat looks like a sell. It just does not want to continue at this and going up here. And yet you look at the November or the December contract, it actually still looks like it's supported. And then when you look at Kansas, it's the short-term moving average seems to have some hold on it. Same thing with Chicago. Here's your milling wheat in Europe, and it's in this downward channel, and soon to have harvest progressing here at some point here. Corn futures keep making lower lows and lower highs here, so still a bearish trend here for sure. And that's all I have for you.